All right, we're going to get into this market picture now in just a moment or two, of course. Then, as you can tell, the screen just loading up as the markets continue to try and find some sense of stability then and sustainability. With regards to the COVID-19 cases, there seems to be an increased number of those. And that increase does mean that it affects market pictures and investors as well, who are fearing for the worst, unfortunately. Perhaps there may be even a rebound in some instances as well. More COVID-19 cases out in the United States, but you're getting a sense then that there is some positivity, though. The Hang Seng and the Shanghai Composite did manage to finish in positive territory this morning in early morning trade. In the afternoon, we're seeing the FTSE 100 out in London and the DAX 40. The DAX, rather, in Germany sit up, while the CAC 40 is in the red, unfortunately, not looking too good there. A pretty flat stance, though, for the JSE All-Share this afternoon as it sits slightly down, but still 55,721 points there, with the banking stocks sitting up more than 1%. Financials enjoying a good, unfortunately not getting a good day. Resources, however, the one sitting in some black territory there, 0.5% higher. 0.25% higher then is the Brent crude price, or rather 0.2% should I say. It's at 0.65% to the good, $43 a barrel for that Brent crude price. It has gone down, unfortunately, today. A lot of questions being asked around OPEC and whether it will continue indeed to keep those curbs on supply. The more they cut down that supply, unfortunately, the price is meant to go a little bit higher. But for now, it is hovering still within that $40 to $45 a barrel mark. Platinum price for now up 0.1%, not too much demand out there, while gold is maintaining its safe haven status, even if it is ever so slightly at $1,804 a fine ounce there. A little bit of strength coming through on the local currency compared to how it was at the end of yesterday's trading. 16 Rand 66, though, not much different from when we were standing here yesterday, though. But it is better off on the day, 0.5% better. 19.03 for a euro. A British pound will cost you 20 Rand and 90 cents. Warwick Lucas from Galileo Capital joining us as we unpack this market picture as well. Warwick, thank you so much for the time. How's this market been? Everything just goes up one day and then down the next by the seams of it.
Yeah, hi. I think it's a lot of very simple but important themes driving matters. So themes are the likes of election prospects in the US, trade disputes between the US and China, and what on earth is COVID going to do next, and how our economy is going to respond, and of course the mythological creature out there called a vaccine, of which when there is no truth, rumors will seem to do. So I think all of that adds to quite a schizophrenic cocktail there in terms of the way in which markets are behaving. And I think the fact that the markets are so liquidity driven also makes for a very volatile market.
Certainly does. If you talk about the volatility of the market, there's also been the volatility in the numbers being reported out by the companies out in the United States. It is earnings season. We even saw Netflix then put out some numbers yesterday, tanking just a little bit as well, because they're predicting, I think it's 2.5 million subscribers, new paid subscribers in the next quarter, as opposed to 5.3 million that analysts had expected. What have you made of earnings season so far? It is just a few days in.
Okay, so the one thing that concerns me in looking at these results and the market's response is how easy it is to go from hero to zero. If we look at those Netflix numbers, I mean, the actual operating numbers were pretty good. They had revenue up. In fact, revenue exceeded market expectations. However, profitability did not. That went under expectations. But also the projections in new accounts. I think they were talking about an estimation in quarter three of new accounts of 2.5 million. Now, and well, I mean, in terms of this most recent quarter, I mean, they exceeded in terms of the number of new accounts. So it's quite a puzzling response there. But maybe that's a genuine forecast at 2.5 million. Maybe they're just being cautious, overly cautious. Or maybe it's management trying to point out, well, yes, we're a tech company and we can all work remotely and so on. But at the end of the day, we're still plugged into the real economy just like everyone else, just perhaps in a more buffered way, but we're still plugged in, and their problems are our problems. And I think that
certainly does.
might be a bit of a wake-up call.
Yeah. Well, I think the market certainly needs one at this point in time, right? So markets have been going in whichever direction they choose of late, and I think it is time, as you made note of. If we turn our attention locally then with regards to some numbers coming out, the likes of Richemont then putting out some of their numbers, the maker of Cartier and Mont Blanc, of course, brands that some of us can't even afford, unfortunately, Warwick, showing then that the luxury goods stuff also struggling quite a bit now.
Yes, certainly substantial casualties of the tourism market, substantially down, of course, right across the world. We can certainly see an effect there in terms of what happened in certain geographies. Those that are least affected by the COVID virus have performed best. So, for example, the Asia Pacific numbers were relatively less awful, only being down approximately 29% in sales versus the 50s and 60s that we're seeing elsewhere. And also by delivery mechanisms. So online sales were down 20%. Versus minus 40 to 50 in other categories. So again, we can see the online presence proving to be somewhat defensive, but by no means bulletproof. Under the circumstances, I suppose a decent result from them, but I think it underlines that perhaps luxury isn't necessarily as defensive as always thought.
Yeah, certainly isn't by the looks of it. All right, then, if we continue with that outlook, though, you still had even more companies coming out, and the Foschini Group in particular. Now, earlier in the week, perhaps singing a little bit of its praises with that 480 million rand offer to purchase Jet stores. But then later on in the week saying that, well, most of their customers or some of their customers may not be able to pay their creditors either. So certainly getting hurt and hammered there. Overall, clothing retailers are struggling.
Yeah, certainly it's a very messy picture, and what we saw in terms of the US, for example, is we saw clothing retailers getting heavily hit there as well. So I think a similar replication is quite reasonably to be expected here as well. I think our clothing retailers certainly made a decent fist of May, and then I think June they struggled a little bit. Perhaps though with this colder weather that's been coming through, we might see a little bit of recovery, although that's quite early to surmise. In terms of the motivations of Foschini, they gave a number of motivations for the rights issue. Part of it was the fact that they do have a debtors book that they obviously have to keep an eye on, and obviously they hope, I guess, that substantial worsening of the unemployment data and general consumer condition in the country isn't going to flow through into bad debts. Well, chances are that there's going to be some of that. So the quality of the book has to be underpinned. But beyond that is also the question of opportunities. And I mean, Jet certainly was the jewel in the Edcon crown. So quite possibly it's an excellent opportunity. All in all, the rights issue does seem to have some sense to it. I think there's a justification there.
Yeah. All right. Warwick, appreciate the time, but thank you so much for joining us this Friday afternoon as we unpack this market picture so much there as well. It is, of course, just this Friday, and we get in your money space right after this ad break, as well as SME on Point with my colleague Diabo Seto, as well as then your books on point coming up a little bit later with Nastasia Aron. So there she is. Diabo, I hope you're well. From us here at the Johannesburg Stock Exchange, though, enjoy your weekend, and we'll see you next week, Monday. That's where the buck stops.